Hello, my name is Shamika White. This is 4.3 Project Data Patterns and Capstone Update for Full Sail University. This is Business 610, Business Intelligence 610, Patterns and Recognition. This is Tesla's data analysis and its SWOT overview. The stock market and financial reporting data for 2022 for the years 2022 through 2024. We see a volatile trend in Tesla stocks. Prices has shown a significant volatility over the past 2 years, driven by broader market trends, company-specific news, and changes in the electric vehicle industry. The stock experienced a peak in late 2021 and early 22, followed by a decline in 2022 due to macroeconomic factors like inflation and interest rate hikes. The stock market and financial reporting, you see that it was a recovery in 2023, and Tesla stock show signs of recovery bolstered by strong quarterly earnings, increased vehicle deliveries, future product launches, and the Cybertruck advancements and the battery technology you see today. You look on your streets and on your roads out in the community, you're starting to see the delivery of the Cybertrucks, maybe only a few, just the silver ones in early 2024, where you'll see a few red and black ones out there, and that's really based on the demographic, which is here in South Florida. Overall performance as in the mid-2024, Tesla stocks has outperformed many of its automotive peers, reflecting investors' confidence in its long-term growth potential and leadership in the electric vehicle market. By 2022, Tesla reported significant revenue growth driven by increased vehicle deliveries, especially in the markets like China and Europe. The company also benefited from its energy generation and storage segments, which saw a rise in demand. Also in 2023, Tesla continued to see strong revenue growth, although the pace slightly moderated compared to previous years. Factors contributed to this include price cuts on certain models to stimulate demand and increase competition in the electric vehicle space. You'll see your revenue growth. The majority of Tesla's revenue still comes from automotive sales, but its energy division, solar panels, solar roofs, charging station services are becoming increasingly important to maintain the company. Profitability, Tesla maintained healthy growth margins, though there was some compression in 2023 due to cost pressures, including raw materials and logistics. However, the company focused on cost efficiencies and scaling productions helped migrate these effects. You have your net income. Tesla reported strong profitability over the last 2 years, with the net income rising in both 2022 and 2023. The company's cost management strategies and expansions of high margin services like software updates contributed positively to the bottom line. And earnings, Tesla earnings improved over year, reflecting both revenue growth and effective cost control. The company also benefited from tax incentives related to clean energy initiatives. These are our key financial metrics, which are cash flow, debt levels, and return on equity. As for cash flow, Tesla's operating cash flow remained robust, allowing it to invest in new production facilities. And for the future technologies, the company also maintained a strong cash position, giving it flexibility for future expansions. For debt levels, Tesla has managed to keep its debt levels relatively low compared to its equity, which is favorable for its financial health. The company has also been able to finance its growth largely through operating cash flow rather than relying heavily on debt. And then this return on equity, Tesla's return on equity has been impressive, reflecting the company's ability to generate returns On shareholders' equity, this metric has improved as the company has scaled its operation and increases profitability. Strategic development, which includes product innovations, market expansions, regulatory and environmental impact. For product innovation, Tesla continues to innovate with new product offerings, including the launch of the Cybertruck and its autonomous driving technology. Market expansion, Tesla expands its manufacturing footprint with the new gigafactories in Texas and Berlin, and you have your regulatory environmental impact. Tesla benefits from favorable regulatory and environment in Europe. Additional client data. Some things you have to look at is political and regulatory environment. As we spoke before, there are some laws in place in order to give people incentives to switch over to electric vehicles. So stock has shown a sensitivity to political events, especially those related to environmental regulations, whether or not lithium batteries that come in a Tesla are safe for the environment. Favorable policies or regulations often correlate with stock price. So if the policy is favorable, like most likely the stock price will go up also. This is a Power BI link for this particular, which will give you the data and information on the stock prices and the overall performance of Tesla. Yeah, you can also see it here. The Tesla stock price with the Bollinger Bands. You see an increase between of that stock price from around $215 per share to $225 per share, and it has fluctuated over the years. This is our data summary, which our current price, which just fluctuates daily. It's $220 per share. The previous close was $210. Our total annual volume of stocks is 81,525,207 with a 52-week range of $138 to $278.98 with a market cap at $703 billion. Some of the other additional data that comes into effect is Tesla focus on the Cybertruck, also semi-truck, with transportation being a big area of need within the United States and also within the world, transporting products, full self-driving upgrades, the battery technology, production delays or cancellations, and environmental understanding. The overall, Tesla's data value. By analyzing these factors, cluster patterns, correlations, and social network impacts, emerging trends allow the company to gain a deeper understanding of Tesla's market behavior and potential future performance. This is your SWOT analysis. These are some of the strengths within Tesla. You have technology and leadership. You have brand loyalty. Some people just buy Tesla because they believe that's the better brand, even though you have comparable companies like Lucid, Frisker, and a few other hybrid models or electrical variants from Kia, Ford, and also GMC. Vertical integration, Tesla control over its supply chains from battery production to vehicle assembly enhances its operational efficiency. And Tesla has a global presence. It goes along with Elon Musk and his name, Tesla. When people see Teslas, they think about Elon Musk. Weaknesses of Tesla. Production delays, frequent delays in production launch such as the Cybertruck can lead to customers' dissatisfaction and missed market opportunities. It took them about 2 years to release the Cybertruck. High competition, increasing competition. As I mentioned before, you have GMC, who has a electric vehicle that's a lot larger than the Cybertruck. You have Kia, who has electric vehicles that are on the market also. You have Ford that has an electric vehicle that's on the market that are comparable to Tesla, and for some may Lucid, for instance, may be a better design or more comparable to what's out there today. Supply chain variables. Tesla reliance on specific suppliers for critical components like semiconductors make it vulnerable to supply chain disruptions. Pricing pressure. Tesla's premium pricing may limit its ability to capture more price-sensitive segments, which now that Tesla has more used vehicles, you see more Teslas on the road in comparison to like a Riviera, which is a electric truck, which average price is about 90,000, or Lucid, which average price is about 90,000. Today, you can find a used Tesla for between $22,000 to $32,000. You have some opportunities for expansion, product diversification, some solar roofs for one, expanding the product line. You have charging stations, sustainability. Tesla is considered to be renewable in the United States, as Tesla doesn't do any of its mining within the US. So once that lithium battery is transformed and put into a Tesla truck in the United States, that product is considered to be sustainable according to US laws and regulation. We have some regulatory incentives, government incentives for electric vehicles adoption, particularly in Europe and the US, can further drive Tesla sales and market. It makes the vehicle cheaper as a tax write-off for the buyer. And overall threats, economic downturns, technological disruptions, and cybersecurity threats. As Tesla vehicles become more connected and reliant on software, the risk of cyber attacks could pose significant operational threats. Thank you.